Everyone, Paul here. Today I'm going to talk about a strategy towards doing calls on the S&P 500, and it's a pattern that I've kind of noticed, and I want to share that with you today. Um, Now, when you're doing calls and puts, what I recommend doing is, whatever your balance is, do not. A lot of people will do this. They'll start do calls and puts. They'll get greedy, and then they'll say they'll probably eventually want to use their whole balance to grow profit. But I don't recommend doing your whole balance because you can lose it all in an instant. There are videos on YouTube of people just losing all their money by just putting up their whole balance. What I would recommend is 5 to 10% of your balance. So for this strategy, uh, I'm my goal is to my pick is to the S&P 500 and doing calls on it, because if you backtrack and look at the S&P 500 over time, now the goal of doing calls and puts is you want to, when it starts going up, you want to get those when you know that the S&P 500 is going to go up, you'll be in profit. So first of all, to explain right now, I do currently have a call going for tomorrow morning when the stock market opens. If you could see that I have an order ready to go for tomorrow. Now I put in almost 400 for a call. So that's a little bit more than 10% of what I have, but the S&P 500 is not cheap. And for the strategy to work, the S&P 500 is pretty expensive. But that's because for the S&P 500, most of the time it is a trend, and over time it's a gradual move up. So let me explain here. Now, the only reason I put that call in right now for the S&P 500 is because I've been studying the 13 and the 48 EMA, and I'm on the day right here. So if this little line you see right here kisses the top, that means the price is going to go up. So that's my prediction, because I think either Monday or Tuesday it's going to cross and then it's going to start going up. So that's why I put in for the call, because I think the price currently is going to start going up. But it's going to be more of a get in, get out kind of thing for me. But I want to explain the strategy for other people and how to profit from it. I'm not going to explain doing the puts. I'm only going to explain a strategy on doing calls. So if you notice, there's a pattern with the S&P 500. So it dips a little bit and then it goes up. It dips and then it goes up. It dips and then it goes up. So if you catch the dips, yeah. So my strategy really is, now I didn't do this for this moment right here because I see a pattern with the EMAs. But if you put your calls in when you see the price start going down, so you wait a couple days for, a couple red candles, 1, 2, 3, 4, maybe 3 or 4, and then you put in your call, and then the price goes up, you'll be in gains. So that's kind of the strategy. It's either that strategy or look at the EMAs. But I do both. But let's just notice here, price goes down, then it goes up. Price goes down, then it goes up. So you put your call somewhere around here, and you put it in for about a week or so. That's why you need a little bit of a balance. So it didn't really work well right here. Went down, went up, and then it down some more. So this probably would have been a loss if you did it right there. But the first thing I try to notice, I'd look at those patterns, but I also look at the EMAs. So Price goes down, goes back up. Price goes down, goes back up. Price goes down, goes back up. And I have this on the day. The day, and you could do the others, but I like to focus on the day because that's when you get probably the best profit. Price dips down a little bit and then it goes back up. Price dips down, then it goes back up. Price dips down, then it goes back. If you caught this, that'd be a lot of gains for you. And the EMA is going up too. So that's good profit right there. So price goes down, goes back up. Price goes down, goes back up. So you see this pattern? I'm not going to go too far here. It's a common pattern here. Price goes down, goes back up. So the first thing I do, know that you know this pattern, and what I do is I look for the red candles to hit for there be a couple days. I mentioned this. Red a couple days, and then somewhere around the middle of the candles being red is when I would put my call option. Now, how much would you set your call option for? I would target as low as a price as you can get. So, if I want to do a call, so let's just say I already have one, but let's just say, so we want to do an option. Say we look at the chart, it's going down, and we want to go for a week out. I would go far down till about, $500, $600 worth, because it is the S&P 500, and you have to have a little bit. This isn't a cheap strategy because it's the S&P 500, but I would probably make my call either on the 392 or the 391. Because let's just look real quick at, and I'm not going to pay for it because I already have it, but what this has to do is the break-even point is at 397. So if it goes up past 397, you're in profit. You're in profit. So you'll turn your $566 into an extra 32, 67, do the math. So for this scenario right here, 397. Let's look at the price, 397. The price would have to be, it's break even at 397. So that's not far from what this is right here. It would only have to go up just like 60 cents for you to be in profit. And anything past that is gains. But I personally wait till I see red candles. And that's kind of the strategy. At first I look at the EMAs and I see if the EMA, if the 13 and 48, and I'm on the day, if the 13 and the 48 looks like it's headed up. And I also, another side note is the relative strength index. I also look at where the relative strength index is, and if it's above 50, that probably means gains, and if it's below here, it usually means it's going to drop. So that's another indicator that the price is going to go up for me, and you see it. Let's just see right here. Right here, when the price started tanking, I'm going to find one where it started crossing, but you see right here where it started tanking, the relative strength index started below 50. So let's find a moment when we see it crossing. Well, here's it crossing down, like I said. So what is the relative strength index? It's below 50. So that signals that it's going to go down. So this moment right here where it briefly crossed, it's above 50, so you could see that it's, that's a signal to me that it's going to go up. So let's look at again. You see it crossing down right here. Crossing down, it's below 50, so that means the price is going to go down. So you can put in a put if you wanted to, but I'd rather put in calls than puts. Because I like it catching it when it's going up. It's easier for me. Here's a moment when it crosses right here. And look at the relative strength index. It's above 50. So you know it's going to go up. So that's another indicator right there. So let's look another moment at where it crosses. Another moment where it crosses. Here's a moment. Right. Kind of crosses. So you see it's above 50 right here. So and then what happens? It's above 50 on the relative strength index, and what happens? Money. Money, that's some good gains right there. So let's just do one more moment where it either crosses up or down. Right here. So we can see relative strength index is above 50, so what happens? Money. A lot of gains right there. So anyway, I kind of use these strategies, these three strategies. I look at the EMAs and I see if they're going to cross. I have it focused on the day, so usually on the day, then you can get the good gains here. And the next thing I do is I see if there's a pattern. I wait for it to go down before I put in my call on it. And then I look at the relative strength index, and if it's above 50, that tells me that it's going to go up. And if it's below 50, that tells me that it's going to go down. So anyway, with this strategy, and you could do it for any other stock as well, but I focus on the S&P 500 because it's been a trend up, and it's pretty much going to be trending up long term. So I think the S&P 500 is a good one to do calls onto, but it is expensive, $500, $600 a put that you have to put. So I would recommend at least having a balance of 6,000 to 10,000 to make this work, because you want to cover yourself, and you only want to do 10% of what your portfolio is, and you never want to wager your entire portfolio because it could go down, you could lose everything. But anyway, I just thought I'd make this quick video and show you how to profit. And I'm going to be making more videos about this in the future and seeing if this is working for me, because like I said, I got my call. Let's see, go back. I'm speaking for myself because I actually have a call coming in for Monday morning. So I'll let you guys know how well it went. Anyway, none of this financial advice. Please play at your own risk. This is kind of gambling. I know, but anyway, if you like this video, hit the like button, hit the subscribe button. I'll see you guys in future videos.